If you're watching this, odds are you're probably frustrated with the 6-7% interest rates that you have seen every time you search online. The truth is, you don't have to let those rates stop you from owning your dream home. What if I told you there's actually a way you can get a rate that's up to 1% below that? Now I know that doesn't sound like a whole lot, but the truth is it can make quite a difference when it comes to your month-to-month payment. More important than that, you might actually be able to buy the home that you want without compromising your budget. Hey everyone, my name is Joel, and in this video I'm going to explain exactly how all this works through something called a rate buy down. I'll explain exactly how they work, how the current market in Orlando is positioned right now for you to take advantage of this strategy, and more important than that, how this strategy actually works and how to do it so that you don't pay anything out of pocket. Now yes, there is a cost for this, but again, the whole point of this video is that I'm going to show you exactly what to do so that you don't have to come out of pocket. So stick around to the end. Now, first, I want to make sure that you can also understand how rate buy downs work in the first place to see whether or not this would be something that would be a good fit for you. Always, always, always make sure that you consult with a real estate and mortgage professional so that they can go over everything with you one-on-one, take a look at your specific scenario to see whether or not this is a good fit for you. Now, jumping right into it, the way that a rate buy down works is that you're going to buy discounted points from the lender. Each one of those discounted points costs 1% of the borrowed amount. So whatever amount that you're borrowing, that's after you pay your down payment, it's gonna be 1% of that. And again, that's just for one discounted point. Each of those discounted points can discount up to 0.25% of your mortgage rate. Now in general, unless you're a real estate agent like me, that can get a bit confusing. But I'm gonna go ahead and give you an example so that you can kind of see what it could potentially look like. Now, since in Orlando, the median home price is around $400,000, I'm gonna use that in the example and assume that you have 10% to put down for your payment. Now that would mean that the amount that you're borrowing is around $360,000. So in order to buy just one discounted point, it would cost around $3,600. And again, that is just to get that one discounted point. So that $3,600 would bring you down maybe up to 1/4 point, and that could bring your interest rate down from, let's say, 7% to 6.75 or 6.5 to maybe 6.25. Now again, that doesn't sound like too much, but again, those quarters of an interest rate do start to accumulate and build up and bring down that month-to-month payment. Now, in order to bring down your interest rate an entire percent, you might end up needing to buy up to 4 discounted points. In other words, if you wanted to bring down your interest rate from, let's say, 7% to 6 or 6 to 5 on a $360,000 loan, you'd probably end up paying around $14,400 for those points. I'm gonna use this interest rate here as an example. It might not be actually where interest rates are right now at the time that you're watching this video, but let's assume that you have a loan for $360,000 at a 6% interest rate. Not including taxes and insurance, you'd have a payment of around $2,158. Now, assuming you drop that down to 5%, your monthly payment would come down to $1,933. That's a savings of $225. Now again, if you were doing this out of pocket, in this example, your break-even point would be just under 6 years, and who knows, you might have needed to move by then. So that's why, again, I really don't recommend doing this out of pocket. Now again, that's not what we're talking about in this video. The whole point is to figure out a way for you not to have to pay that and still get those points bought down, so that way you can get a more manageable, more attractive monthly payment. Now, if you think that's something that would be great for you, go ahead and click that like button below. It would help get this information out to other people who might be in the same situation that you are. Now, what's great about the current market in Orlando is that we're a little bit in a sweet spot where you can actually take advantage of this situation. Now, just to give you an idea of exactly how things are looking, right now in Orlando from December to January and even up to today, we've seen a little bit of home prices still kind of moving up. There still is a bit of demand out there. And unfortunately, the inventory out there is just not high enough to keep up with the demand that there is. And we're seeing that with the homes that are selling week over week, month over month. Now, while demand still is pretty high, inventory is still fairly low, compared to what the demand is right now, what we're still seeing is that homes are on the market much longer than they used to be, which makes a lot of sellers nervous. Not too long ago, or actually about a year ago now, we were seeing homes come on the market and only really be on the market for maybe a couple of hours, couple of days before they got all kinds of crazy offers. So that's not happening anymore. So most sellers are getting nervous after a week and only getting 1 or 2 offers. Some homes are on the market for 2, 3, 4 weeks at a time, which makes a lot of sellers very nervous. And some buyers have taken this as a sign of, oh, okay, let me go ahead and make whatever offer I can to see if I can get them down $30,000, $40,000, $50,000. Now, to be fair, some homes are probably overpriced. That's why it's very important that, if you end up selling or if you need to sell, that you're very clear on exactly what's going on in the market. You get a complete walkthrough of what's happening down to the hyper local level down your street, so that you understand exactly where your home should be priced, so that you don't have to be so nervous about how much you're going to be able to walk away with. Now, on the other hand, if you're buying, just seeing a home on the market for 3-4 weeks doesn't mean that you should just make all kinds of crazy below asking offers. For most sellers, the home is still on the market simply because they don't like the offers they're seeing. Now, a way that you can be a savvy buyer and go in and make a much better offer is simply by instead of asking to get $30,000, $40,000 off the asking price, which is quite a bit of a cut, is simply asking for a seller contribution. And now we're gonna go ahead and move into exactly what you're going to do step by step in order to not have to come out of pocket and get a lower interest rate. So what's a way that we can really come to the middle so that both sides end up with a win? Well, the way that you can do this, again, like I said, is through seller contributions. Instead of going in and trying to offer, $30,000, $40,000 below asking price, you can simply ask for a seller contribution. Thinking back to that scenario they talked about with a $400,000 home, it'd only take about $14,400 with 10% down to be able to buy down your interest rate, so it's 1% lower than what the market is offering right now. Well, basically the way that would look like is this. You go in, you ask the seller, instead of asking to get $30,000 off, you'd say, hey, listen, we want to make an offer, but the only way that this works for us is if we're getting $14,000 of seller contribution so we can buy down the rate. That would bring you down really to, again, $1,933 versus, putting down an offer for $30,000 less than the asking price. Really, you'd have a payment of $1,997, which is actually more than just asking for a $14,000 contribution to buy down your interest payment. Now, that's a win for the seller. It's not the ideal scenario. They still have to give up just under $15,000. But at the end of the day, it's better than having to come down $20,000, $30,000, maybe even $40,000 because they have to take whatever offer they can out of desperation. That works great for you because instead of making an offer that's way, way below asking, you actually found a very savvy way around it. You asked for maybe half of that just so that you can bring your interest rate down. And now, obviously the seller's a little bit happier because, their home wasn't selling. Not only that, but it could also make the difference of whether or not your offer gets accepted over someone else. Maybe someone else out there is asking for $20,000 off, and you come in, you're only asking for $15,000 at closing. Well, obviously your offer looks a lot better. You can actually scoop up the home that you want. You're looking better on paper. Your offer is more likely to get accepted. Now, one of the neat things about the market right now is also that while the inventory hasn't been high for homes coming on the market for resale, builders really have been doing everything they can to get people through the door. They're offering all kinds of incentives. I've seen $30,000, $40,000, up to $75,000 offered at closing. Now, of course, it depends on the price of the home, but again, they're being very aggressive with what they're offering in order to get people to come in and buy the homes that they've been building. Just to give you a little background on that, over the last 2 years, builders have been struggling to keep up with all the demand. There wasn't enough on the market. There are too many buyers that keep coming in and out, and because of that, builders just simply didn't have inventory. They just could not get homes built fast enough for everyone that wanted one. Obviously, with the interest rates going up, that made it a lot more challenging. There aren't as many buyers that are ready to just jump in and buy a home. So that's why now they're putting all kinds of incentives out there. One of them is, yes, they're offering all kinds of contributions at closing, but some of them are already offering lower interest rates if you go with their lender. So you can see that right now, like I said, there is opportunity to buy. It's probably one of the better times to buy as a buyer, simply because, again, the last 2 years, if you tried to buy, you had to put $30,000, $40,000 over asking, waive appraisal contingency, which is, really, can put you in a tough spot financially, and then also waive inspection, which is also very scary, because if, again, you buy the home, you close, you spent $30,000 over asking, you got this great rate, but you just spent all this money that came out of your pocket, and on top of that, the home potentially could have all sorts of issues with the roof, with the plumbing, maybe even structural issues. So again, those were things that were happening over the last 2 years. So while that might have seemed like the perfect time to buy, maybe right now might be a lot better, because sellers are a bit more open to working with buyers. That includes the builders, right? You're in a good spot right now. Interest rates are a bit higher, which means the month-to-month payment might be a little bit higher. But again, you're not having to come out of pocket $30,000, $40,000 or compete very hard to get a home. I would say that right now the stress is a lot lower. I've had plenty of buyers right now who have been able to look at 3, 4, 5 homes and take the weekend to think about whether or not they want to put in an offer. Now, if you want to hear more about some of these different advantages, things that you can do, I do release videos every week. I would recommend that you do subscribe, so that way whenever I do come out with a new video, us as agents, we're out there all the time working with different clients, and there are different scenarios that do come up where we have to be a little bit creative. And when I find one that I think is very valuable, I do share it on here. So make sure that you do subscribe so that you can get that information as soon as possible. Now, odds are, if this video was helpful for you, this video here is the one you'll need to watch next.